Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter, and my name there is @DougPless. So again, the best way to get in touch with me is through Discord. My name there is Doug P. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be focusing on an underlying asset, and setups in that asset can be taken any number of ways. For example, for the S&P 500, setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. And the setups that I'll talk about today can be used for a variety of time frames as well, whether you day trade, swing trade, or take longer term positions. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. All right, here's my agenda for today, Thursday, December 14th. The day after FOMC. First of all, I want to cover news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier in the day. And then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's start with economic data and events for today. So first of all, this morning at 8:30 a.m. Eastern Time, there were two data releases. First of all, retail sales at 8:30 a.m. Eastern Time came in greater than expected, greater than previous. And also jobless claims came in lower than expected, also lower than previous. So both good news for the economy. All right, so that was for today, and then tomorrow. First of all, there is PMI data coming out at 9:45 a.m. Eastern Time, and the big thing is the December options expiration. This is the December monthly options expiration. That's shown by this very large bar on the left. And the orange bar, that's showing call delta notional. That's what's shown on the vertical axis here, delta notional. Just a question. Did anybody hear that ding? That chime or whatever it was? Maybe Dan, if you could let me know, or somebody in YouTube. Okay, Garden Prophet, thank you very much for responding. I thought I turned off. I thought I turned that off. I closed the application that was that was making that noise. No, I think it's something else, Slotarazi. All right, so anyway, let's get back to options expiration. December options expiration. The orange bar is showing call delta notion. This is market maker's position. This is for the S&P 500, NASDAQ, and Russell 2000. And this is a very, very highly call-dominated expiration. This is the call delta notional with the orange bar, put delta notional. Oops, wrong tool. Put delta notional. Shown with the blue bar there. Very heavily call-dominated. And a lot of that call delta is set to expire at expiration, and that should free up some volatility, reduce the gamma notional, and should increase volatility and maybe lead to a little bit of weakness or consolidation in the equity market. Now, this is a very bullish seasonal time of year, and that could set up a end-of-year rally. But anyway, a lot of this call delta notional set to expire, call gamma expiring, and could lead to a little bit more volatility next week. So that's the options expiration on Friday. Very call dominated, just the opposite of a put dominated expiration, where the expectation is for a rally. And that was pretty prevalent in last year, 2022. All right, so that should wrap up the week. Now let's take a look at positional analysis. I'm going to start with the S&P 500. This is the ES futures and Bookmap. And before I take a closer look at this chart, I want to take a look at a larger time frame. And I'm going to go to, first of all, let's take a look at a daily chart. Find the SPX. And this is the massive rally in the S&P 500, also the NASDAQ, that began on October 30th. At that time, traders were loading up on puts, concerned about weekend risk, and then on Monday, price started to rise, implied volatility dropped, and that led to a huge IV collapse, put Vanna rally, and that has continued. There have been a couple of catalysts, CPI report, November 14th, and then of course the FOMC yesterday, indicating that they were most likely done with rate hikes and calling for a potential of 3 rate cuts next year. Led to a huge rally yesterday. And then again, looking at potentially some consolidation today. All right, so that's a daily chart. Now let's take a look at another chart. This is the one that I usually look at, the SPX 30-day 1-hour chart. And so we looked at the rally, a little bit of consolidation in the daily chart. Now let's take a look at levels on this chart. I'm going to zoom in. Just take a look at the last couple of weeks here. So the consolidation between the 4540 and the 4600 level started, the breakout of that level started on Monday. FOMC announcement and press conference yesterday, and now a little bit of consolidation today. Next, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That one may be hard to see. SPX trading well above the upper weekly expected move. The dashed blue lines are showing the lower and upper daily expected move, and SPX is trading within that range. And those are both based on the options market. The weekly expected move I update once a week over the weekend. Those levels remain the same for the entire week. And then the upper and lower daily expected move, I update that once a day. All right, let's take a look at some other levels on this chart. Next, the Spotgamma levels, shown with the dark red lines. These are proprietary Spotgamma levels provided to Spotgamma subscribers, shown on a variety of trading platforms. This is Thinkorswim. So first of all, I want to point out the key daily levels. This is the put wall at SPX 4400. That's the strike with the largest net negative gamma that can be expected to act as support. And the next level up is 4585. That's the volatility trigger. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX is trading now, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. And then the next level up is 4700. Sorry about the ding. I thought I turned off that application. All right, so 4700, that's the call wall. That's a strike with the largest net positive gamma that can be expected to act as resistance, and SPX is trading above that level right now. And 4700 is also the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. So that's where most of the gamma weighted open interest is concentrated. And that level did move up from yesterday. So these are key daily levels. They can and do change every day. So that's why I talk about these levels every day. So the call wall moving up to 4700, that is bullish, but SPX is trading above that level, so that's expected to act as resistance. All right, let's take a look now at another SPX chart, even shorter time frame. And this is I'm showing, let's zoom from this is from yesterday, FOMC. Strong rally up into the close, and then SPX consolidating today below the upper daily expected move. Whoops, wrong tool. Upper daily expected move. SPX gapped up and could not quite make it to the upper daily expected move. traded in a range and it's now moving a little bit lower. Here's the call wall at 4,700. So according to the way Spotgamma sees things, SPX is overbought if it is above the call wall. Now SPY, the call wall, is up at 475, so there is a difference in the call walls between SPX and SPY is trading below that level. All right, let's go to Bookmap now. So we've taken a look at a daily chart, a 1 hour chart, and then a 1 minute chart. All right, now on Bookmap, I have my own cloud notes, so I can show SPX levels. Show SPX levels. So there is the 4,700 absolute gamma strike, and then SPY level just above that, that's the 470 absolute gamma strike. So I'm showing SPX levels, SPY levels, and also other levels of interest for ES, like the upper daily expected move. And there's really been no clear correspondence with reactions at levels. That most likely will change when the December contract expires on Friday. All right, so again, SPX, the ES SPX trading above the 4,700 absolute gamma strike call wall. All right, shifts in levels. I talked about the absolute gamma strike for SPX shifting higher to 4,700, and for SPY, the volatility trigger, call wall, and absolute gamma strike all shifted higher. So a hat trick for SPY. Put wall did shift lower down to 440, not material for today. All right, so bullish shifts higher for levels in both the SPY and SPX. All right, let's take a look at NASDAQ now. This is the NQ futures and Bookmap. And before I take a closer look at this chart, first of all, I want to take a look at a QQQ chart to isolate the QQQ levels in play for today. So most importantly, here is the QQQ call wall at 405, acting as resistance as prices started to move lower. And then earlier today, the 406 level acted as resistance. All right, for QQQ, the volatility trigger shifted higher and the call wall shifted higher. So yesterday the call wall for QQQ was at 400 and now at 405 today. So bullish shifts higher for QQQ. Let's take a look at NDX. NDX trending lower today. This combo level, that's pretty close to that's the 16,600 level, L2 combo L2 level, pretty close to the 405 call wall, acting as resistance. And now NDX is trading below its call wall at 16,500. That's also the absolute gamma strike. And for NDX, all four key daily levels shifted higher. So bullish shifts higher for the NDX as well. All right, let's go to Bookmap, back to the NQ futures. So just like ES futures, I have my own cloud notes so I can show QQQ levels. There's the 405 call wall, and there are two lines there. That's also that combo level just above that. This level acting as resistance. And NQ continues to move lower, down toward the lower daily expected move, also shown on my cloud notes here. All right, so that is the NASDAQ. We'll take a look at setups in a few minutes. Again, all bullish, shifts higher in levels for both the S&P 500 and NASDAQ. And also the Russell 2000. Call wall shifted higher for RUT, and absolute gamma strike shifted higher for IWM. And it looks like just checking. So IWM has been up as high as higher rallying 2.5% today. Now down up by 2% today, and SPY and QQQ all down for the day. All right, sorry about the ding. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. This information is available in the Spotgamma AM Founders Note. It's updated once a day. This is market makers' position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. Note all these numbers are positive, very positive. And the shifts in gamma notional were a little bit mixed today. Gamma notional for SPX slightly lower today, but still quite positive at 1.336 billion. And extremely positive for SPY. That did shift higher pretty substantially, up to 2.36 billion. And gamma notional for NASDAQ shifted lower, and for the Russell 2000 shifted higher, and mixed for the S&P 500. All the key takeaway here is that these numbers are all very positive. This indicates on this position on the gamma curve, positive gamma, that traders are short calls, market makers are long calls. That's the assumption for an index. And market makers have to trade against price to hedge their delta exposure. And that tends to subdue or decrease volatility. All right, let's take a look at the Vanna model now. And we'll take a look at a graphical representation of what that means. So this is the Vanna model for SPX. Sorry about that. What this chart is showing is delta notional. This is market makers' delta exposure on the vertical axis, price on the horizontal axis. That's the spot price for SPX. There are two curves on this chart. The first, the light gray curve, shows how market makers' delta notional may change with changes in price only, and the purple curve adds implied volatility to the equation. That shows how market makers' delta notional may change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. Vanna is a second order Greek. All right, let's take a look at price now. SPX currently trading right around 46.96, so below the 4,700 level. So right around here, right at the bottom of the curve. So this shows at this position there's no Vanna headwind or tailwind. And if price starts to really move in either direction, for example, starts to move lower, this indicates that market makers' delta notional will increase, and market makers will need to sell futures to hedge their delta exposure. On the other hand, if price continues to increase, market makers' delta notional will increase, and again, they will have to sell futures to hedge their delta exposure. All right, that's the Vanna model for SPX. Let's take a look at SPY now. Hold on just a second. All right, this is SPY, Vanna model. SPY currently trading right around 470, right around the absolute gamma strike. That's at the bottom of the curve. So just like SPX, if SPY starts to move higher, market makers' delta notional will increase, and they will have to they'll have to sell futures to hedge the delta exposure. And finally, let's take a look at QQQ. QQQ trading right around 401. So now QQQ has moved over to the left portion of this curve. This is indicating for the NASDAQ, if price continues to move lower, market makers' delta notional will increase, and they will have to sell NQ futures to hedge their delta exposure. All right, so my thesis for the day, just based on the information that was available, looking at the shifts, first of all, looking at the very high gamma notional, I was looking for lower volatility, more of a range day, mean reverting, and that was what the market looked like earlier today. And then also bullish, based on the shifts higher in levels. All right, so let's take a look at some setups now. The first thing I want to do is take a look at what options traders have been doing today. This is the hero signal, hedging impact real-time options. So everything that we've looked at so far, other than Bookmap, has been based on static data, based on open interest, and especially gamma-weighted open interest. Open interest is updated once a day. Spotgamma takes that information, applies their own proprietary algorithms to come up with the levels and the information that we looked at, and that is static. That's updated once a day. That's what I use for my planning process. Now in the execution process, I'm looking at real-time data. So the first thing, of course, I'm looking at Bookmap and also looking at the hero signal here. Hero stands for hedging impact real-time options. And this chart is showing price for SPX and the hero signal with the purple line, price for SPX with the white line, the hero signal on the purple line. And the hero signal is showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures, all into one combined signal. All right, let's zoom in on this chart. So notice from the open, I'm going to zoom on this chart just a little bit. This is the cash open, 9:30 a.m. Eastern Time, and from the open, the hero signal was moving down, indicating traders were taking negative delta positions. And the S&P 500 chopped around, and then just right around 10 a.m. Started to move lower. So that was a nice divergent signal. It really took a while to play out. Let's take a look at one other thing here. I'm going to zoom in on this just a little bit. Separate out puts and calls. So starting around 10 a.m., the blue line started to drop, indicate traders are buying puts. The orange line also started to drop, indicating traders are selling calls. When both those lines move in the same direction, that is a very strong directional signal, in this case setting up a short. And then right around 10:20, just a few minutes later, traders started buying calls, shown by the rising orange line, and around 10:40, 20 minutes later, they started selling puts, shown by the rising blue line. So in this case now, both the orange and the blue lines are moving the same direction, and price responded higher just a little bit after 11:30. All right, so short setup, long setup. And then again, I'm not sure what if there was news items. I could not see anything in my news feed. Just right around 12:45, 12:50, that sharp drop. And now again, the orange line, blue line moving in the same direction, and SPX continues to move lower. All right, let's go take a look at Bookmap. So we know there's pretty strong correlation between options trades, hedging flow, and price action in the S&P 500. Let's go take a look at Bookmap. Let's zoom in. Actually, it may zoom just a little bit more. All right, here's the short setup, 10 a.m. You can see before price chopping around up and down, and right around 9:45, the volume dots showing aggressive buyers. Those are market buy minus sell. Green dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. So price zooms up, a lot of aggressive buyers, and then aggressive sellers start to come in. And it's around that same time, large traders start selling with iceberg orders. That is shown by the on-chart indicator there. That's 1,100 iceberg orders, sell iceberg orders. Note also you can see that with the falling light blue line. And then there was one last gasp up just before 10 a.m. And that was a good entry point for a short. That one last pullback. And then around 11:30 we saw that traders had started taking positive delta positions. Price moves higher. Aggressive buyers start to come in. And then that move higher was fueled by buy stop orders, shown by the rising yellow line, also the on-chart indicators. All right, then after just before 1 p.m., there was a sharp drop. Now, I don't know if that was news related a lot, but there were a lot of aggressive sellers shown by the magenta volume dots. And let's go see what options traders were doing at that time. And there was a clue in Hero. So let's go back to Hero, see what options traders were doing. It was pretty subtle here, but Hero started to make a lower high and then dropped sharply. So again, a pretty subtle signal there and with Hero, but indicating that traders were starting to take negative delta positions. Let's separate out puts and calls. So the orange line and blue line started to drop, and traders really started selling calls first, and just by a couple of minutes, and then started buying puts. Sorry about that. All right, so that's the S&P 500. Let's take a look at NASDAQ now. I'm going to zoom in to the morning here. So right around 10 a.m., Hero shifts lower. Traders started taking negative delta positions. Price move lower. Let's go take a look at Bookmap. Let's go over to NASDAQ. Let's just take a look at one thing in Thinkorswim here. This is a heat map for the S&P 500. We can take a look at the NASDAQ 100 also. So traders continue to rotate out of the Magnificent Seven. And except for Apple. Well, Apple is maybe flat on the day. Microsoft, Nvidia, Google, Meta, Amazon, Tesla green on the day. But traders rotating out of most of the large cap tech stocks. They have a very strong influence on the NASDAQ 100. Still a strong influence on the S&P 500. So traders are rotating out of those large cap tech stocks, Magnificent Seven, really into financials and energy today. And as I mentioned before, the Russell 2000 is very strong today, and SPY pretty much flat, S&P 500 flat, and NASDAQ weaker on the day. All right, so here's back to NASDAQ, and as I mentioned before, 406 acting as resistance. That's right around that 10 a.m. reversal in the Hero signal. Traders started taking negative delta positions. And then the 405 call wall doing its job, acting as resistance. and now price moves lower as traders are moving out of large cap tech stocks into energy and financials and smaller cap stocks. So pullback entries for short. If you didn't get that 10 a.m. first move lower at 406, potential entries back up at 405, at 11, and just before 1, before that sharp drop. And just like the ES, you can see all the aggressive sellers coming in. Green volume dots on the way up and aggressive sellers. This reversal is also right at VWAP, shown by the blue line there, light blue line. Let's go back, take a look at Hero again. And for the NASDAQ, I often like to take a look at another combined signal. This is the combined signal for the Magnificent Seven. Again, these stocks are very large components of the NASDAQ 100. And that's the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Let's zoom in on this chart. So kind of a mixed picture here today. Here's that short setup from the morning, right around 10 a.m. Whoops, wrong tool. Hero starts to make lower highs, although very choppy today. And this was really the clearest signal. The drop right around 1250. Let's separate out puts and calls. So during the day, traders have been pretty much continuously buying puts. That really accelerated around 11:30. Sorry about that. So net for the day, they are buying calls. That's shown by the rising orange line. That activity, they really shifted lower right around 1250. But net for the day, that notional value still is positive, and just about the same for puts. So pretty much flat on the day in terms of notional value, but they around 11:30 they started buying puts more aggressively, and also 1250 started selling calls. Blue line, orange line moving the same direction. And that provides, I think, more clarity sometimes than looking at the total signal. All right, let's take a look at some stocks now. And before I take a look at stocks, let me just bring up one thing here. I've talked about the big options expiration tomorrow, the December options expiration. One trade, and this could be what is happening today. What I'm looking at here is next gamma expiry and the top gamma expiry. And I've ranked the stocks on my watch list by next expiry gamma percent. And then I want to take a look at all the stocks with more than 30% of gamma expiring, starting with Nvidia, Netflix, Google, Tesla, AMD, Meta, Microsoft, and Apple. And what can happen often on an options expiration, traders have been buying calls, and those calls typically are they're expiring on Friday. So as expiration approaches, those calls start to lose value. So when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. As those calls lose value, as price drops, or as expiration approaches, the charm effect, the change in delta as time passes, those calls start to lose value. Market makers' delta notional decreases, and they can sell their long stock hedges. So that's a call gamma unwind. Can be a pretty reliable trade, and that could be starting today. All right, so let's go back and take a look at some stocks. The first one I wanted to take a look at is Netflix. Let's zoom in on this chart. Note that 480 is the key gamma strike, and price reversed lower just at the cash open today at 480, and so far has not looked back. Notice also this flow alert indicating significant or high options activity. Great way to get your attention to take a look at Netflix. And if you got in on a short right around that alert, you're having a very good day in Netflix. All right, let's go take a look at Bookmap. Actually, let's take a look at one other thing. Separate out puts and calls. So today, traders are buying puts, shown by the following blue line, and they're also selling calls. And also, Netflix was in that list of with a large amount of gamma expiring today. So those calls are quickly losing value as price drops and expiration approaches. Let's go to Bookmap. Go to Netflix. All right, there's the 480 key gamma strike. Note the opening print, just right around that level. Large magenta volume dot. Price drops lower, reverses from that level, pullback entries to VWAP. Price targets at not a lot of liquidity, kind of interesting. Well, that's Netflix. It's not as liquid as some other stocks. First high liquidity price target at, oh, I know what that sound is. That is something from Discord. That's what that is. I'll figure out where that's coming from, but I believe that is from Discord. All right, so liquidity targets 470, and there's one at 468. Usually the high liquidity is at the zeros and the fives. So 15-point move lower in Netflix so far today. And traders, again, are selling calls and buying puts. All right, let's take a look at NVIDIA. Somewhat of a choppy morning in NVIDIA, but eventually resolved lower, and actually a little bit before, or about the same time, 1250, that everything else started to move lower. So up until then, pretty choppy in NVIDIA, and earlier today, the 480 level more or less acted as support and liquidity at 479. Let's go take a look at Hero. Go to NVIDIA. And choppy morning. And finally, right around 9:50, between 9:50 and 10 a.m., Hero starts to move lower. And a few flow alerts in the morning. Let's see what traders are doing. Whoops. So net for the day, they are buying puts and selling calls. And the last stock that I wanted to take a look at is Tesla. And Tesla kind of bucking the downtrend today. Tesla often does its own thing and often counter trend to the rest of the market. And note 250 is the call wall. And earlier today, Tesla traded above that level. And calls driving the market. So if there's any question about what drives Tesla, here it is. Traders buying calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. All right, let's go take a look at Bookmap. Remember, 250 is the call wall. $250 the call wall. Note the high liquidity at that level. This is the heat map in Bookmap showing a history of the resting limit orders. Those are limit sell orders above price. Those orders were consumed. Price consolidated just a few minutes and then moved higher. Now moving lower. Back up to the 250 call wall level. All right, so Tesla bucking the trend of the other large cap tech stocks, Magnificent Seven. And there were multiple pullback entries. Let's just zoom. I'm going to zoom in on this just a little bit. Pullbacks. And then pullbacks almost to VWAP. Let's go take a look at Hero again. So very clearly, call buyers driving price in Tesla today. Notice this very typical pattern. And this lasted a little bit longer than usual. But call buyers take their foot off the gas right around 1245, 1250. And price starts to move lower. Note the large difference in notional value, positive 631 million for calls versus puts, which is pretty flat at minus 33 million. So if you're looking for a long entry, this is really what you want to look at. Traders buying calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. All right, does anyone have any stocks they want me to take a look at? Let me know and I'll be glad to do that. Otherwise, we'll circle back, take a look at the S&P 500 and NASDAQ. All right, the S&P 500 traders are taking advantage of the dip down to just below the 4,700 call wall, starting to take positive delta positions. Let's go take a look back to Bookmap, go to ES. All right, so ES finding support. Right around this cluster of levels, maybe even just a little bit below at this 46.93 level. This level is noted as support in the Spotgamma AM Founders Note. That seems to be the final support. And you can see that aggressive buyers start to come in at that level, and also as price starts to increase. Notice also the iceberg orders. A lot of large traders with very large iceberg orders here are buying the weakness, buying the move down. That's shown by the rising light blue line. This is a very bullish signal. Rising light blue line. You can see all the iceberg orders there. 1,222 contracts. That is aggregated into that's 10 separate transactions. 975, 3,500, 1,770, 810, 4,230. A lot of iceberg orders, a lot of buy iceberg orders. Large traders buying as price moves down to the 4,700 level, and note that level was noted as support. Even though it's the call wall, it was noted as support in the Spotgamma AM Founders Note. So options traders starting to take bullish options positions, and as well as large traders buying that weakness with iceberg orders, helping to move S&P 500 higher. All right. So Tarazi wants to take a look at IWM and DIA. I don't have either of those in Bookmap, but we can take a look in Hero here. IWM, very strong in the day so far. Up until about 1 o'clock, traders were taking positive delta positions, mainly buying calls. And now that has shifted bearish right around 1 o'clock. Traders continue to buy puts, and they start selling calls right around 1 p.m. All right, DIA, I don't know if that's in here. Yeah, it is. So this is the Dow Jones Industrial Average. And kind of up and down today in the Dow. Let's see what, I don't think I have DIA in my watch list. I do have YM. So the Dow futures up slightly, 0.15%. All right, so there you go, DIA. Looks like there is a pretty strong correlation between options trades, hedging flow, and price action. All right, Paul wants to look at target. And bullish day in target, trading above its call wall at 140. Traders buying calls in target. Again, when traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. And Microsoft, an overall bearish day in Microsoft, like most of the Magnificent Seven, other than Tesla. Traders are selling calls. When traders sell calls, market makers buy the calls. They have to sell stock to hedge their delta exposure. All right, Garden Prophet asks, would the blue line at higher levels also indicate he means overbought? He or she means overbought. I'm not sure what blue line you're talking about. If you're talking about the let's go back to Tesla. If you're talking about this blue line right here, and if price is trading above that level, or we can go to, we'll take a look at Tesla there. So if Tesla is above that level, that would indicate an overbought situation, if that's the blue line you're talking about. And if you're talking about this blue line, the blue line showing puts, there's no relationship between overbought, oversold. All right, Garden Prophet, you're welcome. Paul, you're welcome. All right, my time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. And remember, tomorrow, options expiration, there is an AM settlement for SPX and a PM settlement. And we'll talk about that tomorrow. Should be interesting. All right, thanks everyone, and I will see you tomorrow. Bye.